Welcome to The Explainer. Today, we're taking a close look at a true cultural titan, Nike. But right now, this champion is on the ropes, facing one of its toughest competitive challenges in years. And let me tell you, this isn't just a rough patch, it's a real, fundamental test of the brand's endurance.
Okay, let's just jump right in with the number that says it all. In Nike's latest quarterly report, their net income took a nosedive, down a staggering 35% from last year. Now, why such a huge drop? Well, it's largely because they've had to slash prices to clear out a ton of inventory, plus unfavorable currency exchange rates didn't help either.
And a profit drop like that, it has consequences. The stock is now hovering near lows we haven't seen in over a decade, which, it raises a huge question. How can a brand this dominant, a brand that's so woven into the fabric of our culture, be struggling this much? And why is their big turnaround plan taking so long to actually, turn things around?
And listen, Nike's own leadership is pretty upfront that this comeback isn't a smooth ride. The CEO's quote here really frames it like a champion athlete fighting back from a serious injury. They're basically telling us, hey, we're making progress in physical therapy, but we are definitely not game ready just yet.
So, to really get what's going on here, we have to understand the massive strategic shift Nike is in the middle of. They're basically rethinking their entire game plan for how they get their products to us.
Now, this is where it gets really interesting, because what we're seeing is a complete 180 in their strategy. For years, the mantra was direct-to-consumer. They wanted to cut out retail partners like Foot Locker and sell everything themselves online. Well, they realized that actually hurt them. So now, they're flipping back to what they call a balanced marketplace, which is just a fancy way of saying they're rebuilding those critical partnerships with stores again.
So this new game plan, it really boils down to three key things. First, they've got to re-energize their product innovation and create that must-have buzz again. Second, they need to fix the wholesale relationships they broke. And third, they're doing a massive cleanup of their inventory to get all the old stale products out of the system.
All right, so that's the plan. But is any of it actually working? Where are the so-called green shoots? Well, if you're an investor who still believes in Nike, here's what you're pointing to. This is the bull case.
The most promising sign is right here at home. In North America, their biggest, most important market, revenue actually grew by 3% last quarter. Now look, it's not a huge number, but it's growth, and that signals that maybe, just maybe, the bleeding has finally stopped in their core market.
And this chart really lays out the heart of the bull case beautifully. You can see North American sales are bouncing back. You see wholesale, that channel they're trying to rebuild, is up 5%. And crucially, look at inventories. After being a huge problem for years, they're finally getting cleaner and more manageable. That's a big deal.
The bulls will also tell you that Nike is getting its mojo back, getting back to what made it great in the first place, game-changing products. They're pointing to new energy in running shoes, the super popular GT basketball line, and new lifestyle shoes that are starting to get some real traction. And all this progress, even if it's slow, has some big-name analysts seeing a positive trade-off between risk and reward. They're basically saying, hey, we think the worst might finally be in the rearview mirror, which makes now a pretty interesting time to bet on the comeback.
But, and this is a really big but, it's not all sunshine and positive momentum. For every one of those green shoots, there's a powerful headwind holding Nike back. And the bears, well, they have a very compelling case of their own.
The biggest drag on Nike's performance, without a doubt, is China. Revenue there fell another 7% this quarter. That's the 7th straight quarter of decline in what used to be their biggest engine for growth. They're just getting hammered by fierce competition from local brands and a more nationalistic consumer base.
And here's the real kicker. Even in places where sales are growing, like back in North America, their profitability is getting absolutely crushed. Gross margins fell by 1.3 percentage points. All that really means is they're making less and less money on every single shoe and t-shirt they sell.
So, why are they making less money? Well, a major reason has been tariffs on goods coming into North America. The CFO himself admits these have been a significant threat. He does try to signal that there might be some reliefs coming next year, but that's still a ways off.
Beyond the financials, there's just a feeling that the cultural brand heat has cooled off. And this quote from a user on the popular SNKRS subreddit says it all. The core fans, the sneakerheads, they're getting way more selective. They're patient, they're waiting for discounts instead of rushing to buy on release day. That's a big vibe shift.
So, where does all this leave us? You've got the bull case, you've got the bear case. Let's look at the road ahead and figure out what the key signals are that we all need to be watching for. And maybe the most telling indicator comes straight from the horse's mouth. Nike itself is telling everyone to just be patient. They're actually forecasting that their sales will continue to decline for the rest of this year. So a full recovery? Yeah, that's not right around the corner.
So ultimately, if you want to know if this turnaround is for real, it really comes down to this checklist. First, we need to see them stop the bleeding in China. Second, we need to see those profit margins start to recover. And third, we need to see proof that their new products can actually get big enough to make up for the decline in their older stuff.
So, the big takeaway here is that Nike has a solid plan in motion, but this race to recovery is far from over. This really is a marathon, not a sprint. It's an endurance test for a company that's literally built on the idea of athletic greatness. And the ultimate question for investors, and really for the brand itself, is whether it still has what it takes to cross that finish line in first place.